The announcement of a fresh round of economic relief has sparked waves of conversation across the nation, as former President Donald Trump's proposed $2,800 stimulus deal has now been signed into law. For millions of Americans who have weathered months of rising prices, tighter budgets, and economic uncertainty, the confirmation that direct checks will soon hit bank accounts comes as both a relief and a source of renewed debate. The figure, nearly double the size of the widely discussed $1,400 checks from earlier aid packages, marks a significant escalation in government assistance. This bold move raises pressing questions. Why now? How will it be funded? And what ripple effects will it have on the broader economy? From the moment this deal entered the national conversation, speculation dominated. Analysts and households alike wondered if the promise of a larger, one-time payment would actually materialize. With the official signature now in place, those doubts have given way to anticipation. Treasury officials have already confirmed that processing is underway, with the first wave of payments expected to arrive before the month concludes. That timeline, if met, could mean real financial relief for families struggling to cover groceries, utilities, rent, or even mounting credit card bills. For context, the $2,800 figure was not plucked from thin air. Trump had long criticized earlier stimulus packages for being insufficient, arguing that households needed more direct assistance rather than complicated programs or slow-moving tax credits. This latest deal reflects that position, a straightforward transfer of funds directly into the hands of citizens. Proponents argue that such payments empower individuals to spend or save according to their needs, giving the economy an immediate injection of activity. Critics, however, warn that such an infusion of cash could add fuel to already persistent inflationary pressures, effectively giving with one hand while taking with the other in higher costs down the road. Still, the immediate mood across much of the country is one of cautious optimism. Social media has lit up with questions about eligibility, distribution schedules, and the mechanics of the payments. Financial experts have been quick to point out that not everyone will see a check instantly. The distribution process often happens in batches, with those who have direct deposit information on file with the IRS typically receiving their funds first. Paper checks and debit cards can take longer, sometimes stretching the timeline by weeks. Nevertheless, the promise of payments arriving this month provides a tangible point of hope, especially for those who have been anxiously waiting for news of relief. One important dimension to highlight is the political strategy embedded in this move. The signing of a large stimulus deal positions Trump as a defender of working-class households at a moment when economic stress remains high. By anchoring the figure at $2,800, well above what many expected, he sends a symbolic message that relief must be bold, not timid. That message resonates with many Americans who feel that previous government responses, though helpful, fell short of addressing the real challenges on the ground. By contrast, opponents argue that the gesture is more about political optics than sound fiscal policy, pointing to concerns about the ballooning national debt and the strain on federal reserves. Economists remain divided on the long-term consequences. Some argue that a direct payment of this size could stimulate consumer spending, leading to stronger short-term growth. Restaurants, retailers, and service providers might see an uptick in demand as households suddenly have more disposable income. Others caution that such stimulus checks, while politically popular, fail to address deeper structural issues such as stagnant wages, job insecurity, and housing affordability. Without broader reforms, they argue, one-time payments act more as band-aids than cures. Nevertheless, the immediate impact is undeniable. For a single parent juggling childcare costs and rent, or for retirees balancing fixed incomes against rising medical expenses, a check of $2,800 is more than just a headline, it is a lifeline. Stories are already emerging of families mapping out exactly how they will use the funds. Some plan to pay down debt, others to catch up on overdue bills, and still others to put a bit aside for savings. For many, this payment represents a rare opportunity to regain a sense of control in an otherwise unpredictable economic climate. As news of the $2,800 stimulus deal spreads, banks and financial institutions are preparing for a surge of incoming deposits. This process is not without challenges. Past stimulus rollouts saw delays due to outdated information, closed accounts, or complications in tax records. Officials are urging Americans to ensure their direct deposit details are updated to avoid missing out on the earliest wave of transfers. The IRS has indicated that their online portal will reopen to allow individuals to verify their information, though millions are expected to lean on automatic systems that already have their details stored. For those waiting on paper checks, the timeline will extend further, with some recipients not seeing funds until several weeks after electronic payments are released. The size of this payment also raises interesting dynamics in household planning. Previous rounds of checks, often in the $600 to $1,400 range, were quickly absorbed by immediate needs. This time, at $2,800, many families will have slightly more breathing room to consider how best to allocate the money. Surveys show that a significant portion will go toward debt reduction, an area of mounting concern as credit card balances in the United States recently hit record highs. Others expect to spend on delayed purchases, such as car repairs, home maintenance, or essential appliances that had been postponed during leaner months. Economists note that when consumers direct stimulus funds into the economy rather than savings, the multiplier effect is stronger, fueling growth across multiple sectors. At the same time, inflation casts a long shadow. Critics argue that putting billions of dollars directly into circulation risks stoking higher prices, particularly in sectors already experiencing strain. Gasoline, groceries, and housing costs remain stubbornly high in many regions, and additional demand may widen the gap between supply and affordability. Supporters counter that the temporary boost is necessary to keep families afloat, pointing out that inflationary pressures stem from global supply chain issues and corporate pricing strategies, not just consumer demand. This tension underscores the complicated balancing act facing policymakers, delivering relief without inadvertently worsening the very problem they seek to solve. Politically, the move has already become a flashpoint in debates about fiscal responsibility. Opponents of the package argue that ballooning government debt places future generations at risk, warning that what feels like relief today may translate into higher taxes or reduced services down the road. Supporters, however, maintain that the immediate well-being of citizens must come first, especially during periods of economic stress. They point out that deficit spending is hardly unprecedented and has historically been used to navigate crises, from the Great Depression to the 2008 financial collapse. In their view, the moral imperative of preventing evictions, hunger, and financial ruin outweighs abstract concerns about the national balance sheet. Beyond the economic calculus lies the broader social and cultural impact. Stimulus payments have, in many ways, become a symbol of how government engages with its people in times of crisis. For some, these checks serve as tangible evidence that leaders recognize their struggles and are willing to intervene directly. For others, they highlight systemic failures that necessitate such dramatic interventions in the first place. Either way, the cultural conversation surrounding these payments often extends far beyond the dollars themselves, touching on themes of fairness, accountability, and the role of government in everyday life. There is also an international dimension to consider. Other countries have experimented with direct payments, but the scale and frequency of U.S. stimulus programs often draw global attention. Observers abroad watch closely, measuring not only the economic effects, but also the political resonance of such actions. If the $2,800 checks succeed in bolstering consumer confidence without fueling runaway inflation, they may reinforce arguments in favor of universal basic income or other forms of direct assistance elsewhere. If they backfire, however, they could strengthen the case for more targeted or long-term structural reforms instead of short-term infusions. For now, the spotlight remains firmly on American households. In living rooms across the nation, conversations about when the money will arrive and how it will be used dominate family planning. A college student may see it as a chance to cover tuition and textbooks. A small business owner may view it as critical cash flow to keep operations running. A young couple may decide it's finally time to pay off lingering medical bills. Each story reflects a unique set of priorities, but together they form a portrait of a nation grappling with both challenges and opportunities in equal measure. The narrative surrounding this deal is far from settled. In the coming weeks, as checks land in accounts and spending patterns take shape, new data will fuel fresh debates about its success or shortcomings. Will it meaningfully ease the burden on struggling families? Will it inject enough demand into the economy to spark a recovery without overheating it? Will it be remembered as a bold stroke of leadership or as a costly gamble? These are the questions that policymakers, economists, and everyday citizens will continue to wrestle with. What remains undeniable is the immediate sense of hope it brings. In a time when headlines are often filled with uncertainty and division, the prospect of tangible, near-term relief stands out as a moment of unity. Whether viewed as a lifeline, a political maneuver, or a risky experiment, the $2,800 stimulus checks are now a reality. And for millions of Americans, that reality will soon be felt not in debates or forecasts, but in the balance of their bank accounts and the decisions they make with newfound resources.